Inflation is much too high, and we understand the hardship it is causing, and we're moving expeditiously to bring it back down.
This will hands down be one of the most historical weeks in the entire stock market, as the conglomerates will be posting earnings dictating whether we are coming or going. And in the midst of this insanity, we are going to be getting the Federal Reserve posting whether we are truly in a recession or not right in the middle of this week. And I'm going to be live streaming all of these events to get my real-time reactions. The link to my live stream channel is in the description below if you want to join for these historical events. But let's mark the dates that matter most to me and what I'm going to be most fixated on. For you dividend investors, tomorrow morning we are getting the likes of Berkshire Hathaway's Coca-Cola posting, guys, and this has been one of those companies that has boded very well through this entire, recessionary period. The stock is up 4.1%. You slap on the dividend yield, we're well over probably a good 5% return considering how bad the S&P 500's performance been. And this is really going to bake into if they are able to beat a lot of the inflationary pressures, the pricing increasing, whether consumers are still using these products, which I'm sure Coca-Cola will be just fine. These companies, I'm not expecting huge growth rates, but they're usually pretty stable. And then the next one coming up, we got McDonald's tomorrow morning as well. This one survived the geopolitical event after shutting down like hundreds and dozens of McDonald's stores over in Russia. So they're doing surprisingly well considering how good that last earnings period was. It'll be really neat. I go to McDonald's, I'm always seeing lineups down the freaking drive-through, so I'm sure McDonald's will be just fine. The stock is trading down 5.57%, but these have been safe haven investments where people have been hiding out in during this insanity with tech selling off, right? And the one I'll be paying most attention to will be GM. I don't think Tesla is a good indicator to the future or the current economic circumstance because of the amount of demand that they've had, whereas GM has baked more into society. We're going to get to see how this company is doing with sales, supply chain shortages, and I think it'll be a more accurate indicator to the recessionary period. People are actually still buying new cars and the value of those cars selling off, the margins and everything else in between. GM is currently trading down 43.44% year to date. And now more importantly, once we get past these guys, we're going to move into the most important ones for me that I'll be fixated on, like 9 ways to hell. And of course, we got to talk about Google stock because this is the one I want to buy. But obviously, considering how bad Snapchat's growth was, or the anticipated growth, I'm presuming because Google is a primary ad spending company, one that I use very religiously, not only from promoting ads, but getting paid from ads. As we take a look at the actual earnings behind this YouTube channel here, guys, the thing that worries me the most is this playback CPM. This is how much I'm getting paid per 1,000 views. And over the last 90 days, we can see that, at the beginning of the quarter here, guys, the peak was about $31 per 1,000 views, but it has steadily declined to almost in half. And I'm really worried this is because if you don't know how Google Ads works, it's kind of an auction-based system on how much somebody is willing to pay to get an ad in front of your viewer, your videos, and all that stuff. So right now, viewers or ad spenders are willing to pay a lot less, and the competition has been dwindling away to the point where we're seeing almost a 50% drop. So I'm curious to see what Google posts, but if Google does post fairly bad numbers, I'm going to be all over it. I'm going to be buying it because I know this is a temporary period, and inevitably people are going to be doing ad spending again, whether that's 6 or 12 months from now, and they're going to be going to Google to do it, let alone the fact that they're involved in self-driving, genomics, all this AI stuff that I absolutely love, that I think is going to be potentially trillion-dollar capabilities into the 10, 20-year periods ahead. So this is one that's definitely going to be on my buy list, but we just want to get through the volatility. I do not buy stocks during earnings period, all right? Now, so now taking a look at the Meta Facebook. Now, unfortunately, you can really only sell so many VRs, and this thing is a profit-losing machine, and their primary business is still ad-related, so they're going to be in the same boat as unfortunately Google here. But the worst part about this one, guys, is it's already trading so insanely cheap, even to Google, right? I mean, this thing trades for a PE of 12.8, Google sitting at a 19. So we'll see if, Facebook has been so plummeted into the ground that even if it posts bad numbers, I still have a hard time believing the stock is going to drop dramatically, but I could be wrong, and I have been wrong in the past. So again, Google's going to be July 26th. On the 27th, we get Meta, and then in the middle of this, guys, the middle of the week, July 28th, the Federal Reserve is going to be announcing whether we are truly in a recession. What is a recession? Well, it's just 2 straight quarters, 6 months of negative GDP, which is gross domestic product sales, people freezing up on spending money, which I'm seeing in my own personal life, friends, family. But what's going to happen here, my prediction in the next 6 to 12 months, we're probably in a recession. But the fact is consumer spending is going to inevitably come back as inflation cools off. And as inflation cools off, we're going to see less aggressive interest rate hikes. We just need the indicators to prove it. I think Jerome Powell is probably going to mention something along those lines, or at least it's just what I'm anticipating here, folks. So after that, on July 28th, we're going to move into the iconic market mover, the tippity top of the iceberg or the mountain, the Everest of stocks, guys. At that top, we're talking about Apple, of course, which has been partnering with all the auto companies, not Tesla, not any of the real auto companies in the fact of the future, but they are trying to bring up, GM, Ford, a lot of these legacy auto companies into the future by partnering with them on Apple Play, building out the in-screen entertainment systems. I'm not sure what their plan is there, but something tells me it's related to the software side of the vehicles, which is going to be very interesting because they're like Batman. They have their bat cave and they very little talk about the future of their technologies, which kind of bothers me a bit because Tesla's so forward-looking and they just share the technologies they want to bring to the future to get the best, obviously the best technical engineers and software engineers and stuff like that. But July 28th, folks, did you stop buying your iPhones and your MacBooks? We're about to find out because Apple has never posted a bad earnings. So if this is the first time in a decade that they're going to post some slowdown growth, it could be detrimental to the stock because it does trade at a pretty healthy premium of a 25 price to earnings target, down 15% year to date, and has been rallying pretty nicely off of its lows, probably because Berkshire's been buying it or God knows who's been gobbling it up here, but it is up 18% from those lows. So then finally here, guys, we're going to be getting Amazon, another true indicator to whether we're in a recession or not, July 28th. This is another company that if it miserably tanks, which again, I'd rather that happen, same thing with Google, because I'd like to buy because again, I think what we're going through will be temporary and in 6 to 12 months, this will be a null conversation, right? So Amazon is one I'd closely pay attention to here, folks. Again, down 27% year to date. And then more interestingly, the conglomerates, again, similar to Coca-Cola when we're talking about the candy market, which this is a true monopoly. Hershey, they literally own every holiday from Hershey's Kisses to Easter when you're talking about, those mini eggs, and just, God, this company owns it all, right? So July 28th, this company has crushed it beyond belief. So, I mean, they've literally hit every earnings period. The stock is up 11.82% year to date. The long chart is absolutely absurd. The price to earnings multiple is a little bit high for my favor, but I don't think this thing's going to post bad numbers. Candy, chocolates, all that stuff's really expensive. So, are you going to give up that addiction? It's like smoking. I don't know. Maybe you will, maybe you won't. But we will find out. And taking a look at Twitter with Earnings Whisper, that does an incredible job at bringing all of our favorite stocks into a visual laid out calendar. We can see also coming up with Tuesday, you got Microsoft, you got Visa. I mean, Visa is going to be a huge insight into the consumer spending habits, the debts of the economy, all that stuff. And then obviously coming Wednesday, Shopify, I think is going to be another major indicator to whether we're still in kind of this risk off environment. If Shopify continues to plummet along with a lot of these tech stocks, we're still clearly moving in a bear market territory direction. But we also got Waste Management, a lot of other cool ones. I'm going to be paying a lot of attention to is things like Southwest, Delta. I mean, the airports here in Toronto have been absolutely packed. So the recovery and travel plays should probably be boding pretty well, as I'm also booking flights right now. Things like Pfizer, when we're talking about the pandemic and monkeypox and all this weird stuff, to see if Pfizer's still able to pull these incredible growth rates off these vaccines and things of that nature. And then finally coming into the end of the week here, guys, we're going to see a lot of the oil conglomerates with things like Exxon, Chevron. We're going to see how these companies still continue to take advantage of the really high oil prices, though are coming down. I still think they're going to be printing tendies like there's no tomorrow because we're still kind of in this commodity boom market, but commodities are cooling off, right? So we're going to see how the Federal Reserve is going to kind of indicate that. I think they're going to mention some of this stuff. So I'm going to be paying a lot of attention again to all of this, and I'm going to implore you to come enjoy the entertainment of this historic week on my live stream channel. The link again is in the description below, but I want to pass the question off to you. What are the most pivotal earnings for you? What are you paying attention to? Are you a dividend investor? Are you continuing to cost average into ETFs? I'd love to hear about all of that in that comment section below, but stay cool, stay awesome, and as always, I look forward to catching you in the next one.